Hey guys, it's Chris Wong. I'm filming this video as of December 23rd, 2024, and I'd like to talk about the third margin call I just experienced. So as a disclaimer, I'm not a financial advisor. I'm just guys interested in building a portfolio. So last Thursday, I experienced a margin call, and it was ex-dividend date for the weekly paying dividends like QDTE, RDTE, and YMAX. So because the stock price went down and also the market went down around that time, I experienced a margin call. So I actually thought about, why don't I just wait it out? But then the next day, I got another margin call issued showing a bigger balance that I have to pay back or just sell some shares. And I didn't get the perfect timing for trying to sell YQQQ or even DIPS because I had to work in the morning shift, and the lowest price I saw for Friday was in the morning, and I had to do my job. So the only time I get to make trades was during my lunchtime. So I had to wait until around like 1 o'clock. So my original thought was to wait until Monday for the dividends to get paid into my account and wait to see until the market picks back up. But then Friday, because the margin call was bigger, I thought about seeing what happened if I can just sell YQQQ and sell DIPS and try to average down the funds that pay weekly dividends. I was actually thinking now if I actually do like having the short ETFs by YMAX, and I'm thinking now I actually don't enjoy having them as much as I thought I would. When I sold YQQQ, I actually still sold it at a small loss, and I'm thinking for like the long-term gains, I should be more focused on the regular ETFs that have a long-term trend to go up in share price or to have long-term gains. But thinking about the inverse ETFs, it's supposed to do the opposite of the regular ETFs. So in the long-term thinking, would the ETF share price just keep going down for the long term, and the dividends may not exceed the share price decline? It seems like if I was to make money off the inverse ETFs, I would have to try to time it better. Like I'll have to try to time it when the NASDAQ is up or close to as high as possible before it goes into market correction, and then have to sell it when it goes back down. I may consider adding YQQQ back to my portfolio, but I'm just going to wait until the NASDAQ goes back up. So one way I might check to make sure the NASDAQ goes back up is check on the share price of QDTE, check QQQ, and make a decision on whether I want to start buying YQQQ again and just average down, or I can just leave more buying power available and leave more than enough room to be able to withdraw money out and to handle market corrections without worrying about margin call. I actually still hold shares of CRSH, the inverse Tesla ETF, and because I actually have a bigger loss on it, so it's not worth it for me to actually just sell it at the loss that I'm seeing at. And in the meantime, I'll just still collect the dividends. If the actual Tesla stock goes down, then I may consider selling the inverse. I just don't know what the share price is going to be, and I just have to consider if the dividends pay enough to actually minimize the loss. I'm not against inverse ETFs, but I'd rather just focus on YQQQ if I were to get back into inverse ETFs again. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.